the fact is with Solana that at this point it's like so tightly controlled by people that really deeply believe in it that it is kind of priced for failure. What I'm saying is like there's zero fast money in this thing right now.
Yeah.
And so I think any hint of rejuvenation from Solana probably skyrockets this thing. I think it would take
one big game drops or one.
Yeah, there's no fast money in it. Hello. You've got Avi and Jonah here. I want to welcome you guys back to the now real inaugural second episode of 1000X podcast. We took a bit of a hiatus for a few months there for a variety of reasons, but we just wanted to make sure that we could bring you this content consistently and via a consistent platform that you guys can come to and expect that we're going to be regular with our talks and appearances. So that took a few months to just figure out what that would look like. So we'll be coming to you for about 45 minutes to an hour every 2 weeks, talking about our takes on the market, and I'm super excited about it. I think most of the people that pull up this podcast, at least for the for the first one, probably know us from either Twitter or from our previous podcast or other podcast experiences. So I won't waste too much time on introductions, and your time's valuable, so we can hop right in.
I'm excited too, Avi. Glad to be doing this. I mean, episode 0 was a good chance to workshop how we're gonna do this podcast, and since then it's been a pretty busy market. I mean, we were bullish. We were right. The price of crypto doubled pretty much over the course of our little hiatus, but now it's off 10-12% in what looks like kind of a scary retracement. And a lot of people in the market are asking themselves, hey, is this just a return to 27, 28K, that range that we had since the banking crisis? Or is this the beginning of a fresh downtrend that's going to, wipe out a lot of wealth? I tend to think the former. I think that people often get pretty worked up about, regulatory headwinds or this or that fire sale going on as a result of, perceived liquidations, Mt. Gox, others, what have you. I think most of that is frankly priced in. I think people often ignore the second derivative of the information. Like, hey, is the regulatory climate going to get worse or less bad than from here? Can it even get any worse than this? I tend to be more of an optimist. That's my bias. I think the regulatory climate will become less restrictive rather than more, and I think the market is more than robust enough to absorb the upcoming spat of liquidations. So short-term chop, possibly a bit of amplitude, not much to do in the near term, but medium to long term remain pretty bullish. What do you think?
Yeah, it's tough, and I'll give you the 3 things I'm thinking about right now. The first is on the way up. It was very hard for me, maybe less hard for you, to identify the type of buyer that was buying post 28K, post 29K. Like who are the guys that are coming in and really hammering it? I think from 20K to 25 to 26, a lot of the buyers, based on the way that the market was trading, based on your average order sizes that you were seeing go through, based on the way that CME open interest was trading and versus open interest on Binance and all these other platforms, you could make the argument that it was high net worth individuals, it was large macro funds, it was potentially people out of Hong Kong and Dubai really coming into this market, and then also people that were betting on the digital gold narrative. Gold 2.0, gold was ripping as well. Gold went up 10%, 15% from the bottom of the banking crisis, and I think a lot of those buyers, what I'd say is that they dissipated around 28K. You just didn't see that type of activity in the market, and what we were betting on at that point was retail coming in and pushing it higher, maybe pushing it to 33, 35. You get above 30 and maybe retail mania comes back in. And so what actually ended up happening is I think a lot of people, including ourselves, were a bit positioned a little early for maybe a rotation from Bitcoin to altcoins, expecting that retail would come in. And effectively what happened is that didn't materialize. So the question that I have, so the first part is, okay, well, who are the buyers on the way up? We kind of knew until 28K. You bet on retail coming in post 28K, pushing it to 30. They managed to do a little bit, didn't manage to go further. It didn't extend to altcoins. There wasn't retail in there for altcoins. So now we're coming back on the way down. And the second part of this is, okay, well, we know who the first set of buyers were, and we know that retail didn't really appear. And in the second,
How do you know that? How do you know that retail? Like, what do you look at? What should listeners look at to see, like, hey, is retail starting to FOMO into this asset class?
So I think the unfortunate, so for me, a lot of that is a little bit hindsight. It's saying, okay, well, if I look back on it, the biggest alt moves from the large caps were 15-20%. There wasn't a ton of rotation out of Bitcoin into altcoins. There didn't seem to be a massive or a large increase in volumes on derivative products on Binance or OKX or Huobi. And so in hindsight, what I'm saying is that I didn't see retail come in a large way. And so now we have a situation. Bitcoin's trading at 27.5 at this current at this current level. And my question is, okay, if retail is probably not going to buy the dip because they didn't buy the breakout, and retail tends to buy breakouts more than they buy dips, then you have to bet that the first set of buyers are going to come back in the market and drive this up. So, your high net worth individuals, your people betting on gold, but gold is now trading poorly, and equities are trading okay. And actually, there's been a decoupling of Bitcoin from equities in the wrong direction, whereas before there was a decoupling in the right direction. And so my view is that the type of buyer that propelled us up is likely no longer present. And Bitcoin has been trading it trades in a very trend-heavy fashion, right? We trended all the way from 20K to 30K. We've seemingly broke the trend now. And so if I were to, gun to my head, hey, where's Bitcoin going to be in a month? Probably 24K, in my opinion, because of it. Now, that's not a massive move for Bitcoin. I mean, okay, I'm sitting here saying, hey, put a gun to my head, that's a 60% chance you get 24K, 40% chance you get 30. But what that means to me is that, hey, I probably don't want to be in altcoins. Yeah, I probably want to hold a reasonable amount of cash, and I want to be cautious with my buying, because I think that these guys that allocated originally the high net worth side is going to look for value levels, and I don't necessarily think that 27.5 or 27K is that value level.
Yeah, it's kind of just that post banking crisis range. It's not really something where you say, wow, this is a real generational buying opportunity. 24K, I think you'd attract some people. Certainly the people who are saying, hey, maybe I'm a little bit too late. Should I buy when it was trading 30K? At this point, though, I have a bit of a tinfoil hat thesis about who the mystery crypto buyer was, Bitcoin buyer, really. My sort of conspiracy theory here is that as part of the de-dollarization narrative, de-dollarization is a cool word, but just abstracting it away for a second, what's really going on? That you have governments like China that hold 10 trillion US dollars worth of US dollar denominated securities and cash equivalents, and they're looking at what happened last year with the Ukraine war and what the US did to, the Treasury effectively did to Russia's US dollar denominated assets, which is, drum roll, they took them, and thinking to themselves, hey, maybe we should let a little bit of this US dollar denominated exposure roll off and reinvest it into other things. You can see that happening in gold markets. The, Chinese central bank will publish, on a delayed basis. You don't know if the data is spot on or not, but, they publish their holdings, and they, those holdings are going up. They're not staying, static. So I think that if central banks are accumulating non-dollar denominated bearer assets like gold and reducing their US dollar denominated holdings, they're probably doing something similar with crypto, a bearer asset, an alternative investment. And that was sort of my hunch, especially when Bitcoin would start to outperform during the Asia session, not during, North American stock exchange hours, over the course of this sort of last leg up from 28 to 30K. Now, like you said, it's absent. And usually what happens when you have a big buyer in the market, an elephant in the room, and prices don't seem to reflect fundamental reality because the flows are what drive the prices, usually one of two things happens. What definitely doesn't happen is equilibrium. What can happen is that that elephant in the room is just bigger than everybody expects and the market takes off. Or the elephant, just kind of gets sleepy and walks back out in the jungle and falls asleep, and then prices, kind of come back off. And I think the latter of those two is what just happened. I don't know. Is that crazy?
No, I don't think it's crazy. I remember us talking about this offline, where we were looking at the balance sheets of we looked at China and India, and there's been a lot of gold accumulation. I don't think it's insane to think that I don't necessarily know if I'd go so far as to say that governments themselves are buying, but it's possible that government funded vehicles are buying, right?
Yeah.
Maybe through a couple of layers, they might be allocating. But what I think is absolutely true is that the banking crisis caused a lot of people in Silicon Valley to buy Bitcoin. It caused a lot of high net worth individuals to buy. I think that it also reinvigorated the narrative for people overseas, and I also think that not necessarily overlooked, because I think it was reported on enough, but the opening of Hong Kong to crypto is very important. In June they're going to be allowing retail trading in Hong Kong, and this is anecdotal, but it's probably led to reasonable amounts of buying from Hong Kong, because as people see, hey, I can go access crypto again, I can go buy crypto again, and maybe I can actually go front run the smaller tickets, the retail, once this open up to them, and then you look at what was happening in Russia with the foreign reserves being frozen. That's always in the back of your mind, especially as things heat up between the U.S. and China. So I think there's just a little bit of confluence for why you might get allocation to crypto, and it did have to come from somewhere. I do also think that CZ buying probably helped a bit.
That's I don't know anything about that, but that's an interesting theory. I mean, at this point, like, I agree with you that Hong Kong is super relevant. I think that it's a good reminder to all of us in, just any market, that you can't, like, unless the G20 nations get together and just ban this stuff, it's a global market. One government, even one as powerful as the United States government, can't necessarily control this market effectively unilaterally. When China banned crypto, it was obviously negative for crypto a few years ago, but the U.S. really stepped up and things took off from there. Mm-hmm. Now you see kind of the pendulum swinging back the other way. So it is interesting that Hong Kong's deregulating, right, as the U.S. is sort of bolstering its regulatory efforts.
I mean, it's in my opinion, I don't want to speak too strongly in case people are listening too closely to us. We get too big, but I think it's a massive strategic mistake for the U.S. to make right now, and I think everybody else is actually very excited about it. I mean, even the U.K. is excited about it, and there's a lot of there actually one thing that's going to be very interesting is that our internal opinion is that there's probably some resolution, either positive or negative, to the Ripple lawsuit in the next 2 to 3 months, where there's some decision point that's going to occur that's going to give the market a lot of information about how the case is going to go. And what that means is that on that headline, if it's positive, you probably want to buy as much, not just Ripple, but you probably want to buy as many altcoins as you possibly can, especially the ones that have been deemed high-risk securities. DeFi probably does very well on that day. If it's negative, continue holding no altcoins, because you right now you probably shouldn't be holding that many anyway.
That is actually an interesting point you bring up. Crypto is one of those markets that's nascent enough where you still have a bit of time to react to news. In TradFi, if OPEC comes out with a decision to cut, like if you're trying to click buy on the NYMEX, you're just too late, right? Meanwhile, you seem to have an amazing track record of reacting to these things. And usually, what sort of time frames do you see them, play out over? Like, for example, if there were a decision in that lawsuit, or if there were, perhaps some sort of perhaps some sort of guidance that came out of Washington. Maybe it'd be too late to trade XRP, but how would you think about rolling risk into, out the curve into alts?
Yeah, I think about it really as it's just two axes. It's just, and it's time by the way is not really one of them. It's price movement and relevance of news. And price movement is generally correlated with time, but not always. Sometimes you get some pretty slow reactions. I think that generally the more complicated the news, the more like the more complicated the news, the more edge there is. So for example, with a Ripple lawsuit, if the lawsuit is a Ripple has settled for a fine, and that's a headline that comes out, that actually doesn't really tell you that much. You need to figure out, well, what exactly happened? Did they not admit guilt and they just settled? Did they say, hey, it was a security at the time of issuance and now it's not a security? Did they say, hey, it's a security at the time of issuance, it's now a security, we're going to pay this fine and then we're going to shut down extra, right? So it's like you kind of have to understand, like what is good for the market and what is and what is bad for the market. And obviously that comes out in the docket. It might not appear directly in the Bloomberg headline. You might actually have to open the PDF and go read through it. But I've noticed a lot in crypto, and this has generally become better and better over time, just as any market would. Things take a while to be digested by the market, and it also, some things tend to happen that are inefficient. So one example of this is the Doge moves. Basically every single Doge move that has happened because of an Elon Musk tweet has reverted in 48 hours to 72. Like the hit rate on that trade is so insanely high that if you sell Doge 45 minutes to an hour after an Elon tweet about Doge, like your hit rate on that is like 90%, right? And so you can actually play it from both sides. I mean, I remember one example of this was, if I remember correctly, like a few months ago when the market was ripping, Sand had announced a partnership with Saudi Arabia to invest, in them or in one of the games. I'm forgetting the exact details of the news here, but on the news it went up, like 6 or 7%, but it was on a day where Bitcoin and ETH were ripping. And so when we saw that, we were actually late to the news. It was up 6-7%, but on a day when the market is ripping that aggressively, and the theme of the moment and the animal spirits of the moment were all centered around Dubai, it was centered around Middle Eastern money. It's like, okay, well, that's actually probably still a good trade, because we were within, like 5-6%
spitting distance of the benchmarks. Yeah,
it's not it's spitting distance of the benchmarks. It's not that much. So you buy, ended up today 20%, right? And then you clip that. So if that had happened in a market where Bitcoin was up or Bitcoin was down 1%, I'm probably not taking that trade. So you also have to contextualize it within, okay, well, what's happening in the rest of the market? How many people are there staring at this stuff? How much money is there to move around? I'd say that now this market is a market where you need to be very careful with those types of trades, just because of what we were talking about earlier. There doesn't seem to be a lot of trading interest.
Yeah, I mean, retail interest is kind of what you have to monitor. I mean, back in the day, there was the Coinbase premium. If Coinbase traded over a bunch of other exchanges, you knew that it was retail buying. Maybe one day we'll get the Hong Kong premium, but maybe listeners should just try and develop some metric for retail-driven strength to use as kind of a barometer for, hey, should I be trying to do these riskier? Should I dip my toes into riskier altcoin trades, or should I just stick to Bitcoin and ETH, stay disciplined, stay patient? And interestingly, to your point, Avi, like, I guess we had, in retrospect, the best opportunity of the year would have been one that I was a little bit too scared to capitalize on in any form of reasonable size, which was the dip buy during the banking crisis, when on-chain activity was going crazy. People were swapping, stables into Bitcoin and ETH because Bitcoin and ETH seemed stabler than the stable coins. And there was clearly this sort of shift in the paradigm from, hey, this is a correlated macro asset, to, hey, this is, this this crypto asset thing might actually be fulfilling its promise as a, a banking system alternative. And on that note, people who saw that coming would have had a real opportunity in the benchmarks that didn't play out too quickly to actually react to. And so I think we might have another one of these types of opportunities coming down the pike, possibly as the debt ceiling approaches. And I know crypto people aren't necessarily as focused on this as, if you're a treasuries trader or just a, more of a TradFi participant, but this one seems kind of real. Like it seems like we might.
What are you seeing on that side, Jonah? Like what are you seeing with the debt ceiling that worries you?
Well, okay. So in 2011, the United States of America got downgraded from AAA, not because of an inability to pay, but because of a potential unwillingness to pay. And that was a big deal. I mean, gold, that was the beginning of a 20 or 30% gold rally. I forget exactly how much, but it was a big one. And a lot of markets tanked, a lot of risk markets. Gold went up. Now, I guess the government technically shut down in December of 2019, I want to say, for 25 or 30 days, and they kept paying back they kept paying back their debt. They were servicing their coupon payments. They were repaying principal of T-bills. They just shut down government services, and basically they subordinated employees of the government and their salaries to servicing their debt. They put the debt holders first. Now we've got a situation where this was over the Donald Trump wall thing. Now I think the vitriol is just as high, if not higher than then. And unlike then, interest rates aren't zero anymore. So you have mom and pop holding money market funds trying to earn 4 or 5%. You have people holding T-bills, billions and billions of dollars worth of short-term securities roll off every month. So if the government were actually to default, if there were to be a standoff in Congress that results in no resolution whatsoever, and the government, Yellen is already using extraordinary measures, to quote her, to just pay back what the government owes right now. If that ends during what's called the X date, sometime in the next month or two with no resolution, then you end up with an unprecedented event in financial history whereby the supposed risk-free rate is no longer risk-free. The United States government will say, hey, we owe you, hey, Mr. Dentist, we owe you $100,000. Sorry, we don't have that for you right now. We got you though. Like wait a week or two until we figure this out in Congress. And then I think, what do you think gold could do or Bitcoin could do in a scenario like that?
It doesn't. It doesn't seem like that many. I mean, maybe I'm just not paying attention to the right place, but it doesn't seem like that many people are worried about this. What is do you have the timelines mapped out in your head as to when you think this would become a real issue?
Basically what's going on right now is a T-bill expiring in May yields 3 and change percent, 3.3, 3.4. A T-bill expiring in June yields 4.5 to 4.8%. So you've got 150 basis points of differential in, just yield for government securities with a 1-month differential. So that tells you pretty much all you need to know about trepidation around the date where the United States might potentially default. It was supposed to be late June, early July. Now they've rolled that forward because supposedly tax receipts were underwhelming. But I can't even believe that they're discussing this. And, it's in every major newspaper on the front page. But markets aren't necessarily getting roiled yet because I think we've been through a few of these that have resolved in an okay fashion.
Yeah, I mean, I think in that scenario, it'd be interesting to get an exact look at the historical analog of what gold did during that time. But
30% both times it was real. That's big for gold.
Okay, you confirm that? Okay, nice.
Yeah.
I'd bet that Bitcoin would do quite well in that scenario.
Me too.
Yeah, and if you look at that, if you look at the correlations between BTC and gold, and then BTC and equities, it's basically flipped over the last month. I mean, is a lot more correlated with gold than it was with equity. So I think if that causes gold to rip, then Bitcoin rips. I think it would probably catalyze a decent amount of high net worth buying. Although I do think that the one thing that I do worry about with Bitcoin is just, and this has been talked about a decent amount, but I think it's important to talk about a little bit more, is the supply side story is still quite large. You have the government sales of Bitcoin, and you have the Mt. Gox sales of Bitcoin that are coming through. So my take on that is that it would be a similar to what happened before the banking crisis, where I think what ended up happening is it just pushed up the low of Bitcoin. So I think a lot of new holders came in because they were worried about the banking crisis, and those holders, some percentage of them are going to be converted to long-term holders of this asset and are going to stick in this asset for a while. But that doesn't necessarily mean this thing goes up in a straight line. So I would bet that something similar happens. Like, you probably get a plus 15, plus 20% move from Bitcoin, and then a retracement to higher than where it was before. Maybe a 20 to 30% move, depending on how serious it is and how much gold moves. And then you get some sort of retracement. I think the story of Bitcoin has always been, it really rockets hard when retail gets involved. And so my view is that for the next month or two, potentially 3 to 4 months, we're probably just going to be trading sideways to lower, unless we get like a massive catalyst like this. So I guess what I'm trying to say is, I wouldn't view this as a long-term catalyst to buoy the price of Bitcoin to 40K. I would view it as an opportunity to trade it the similar to what the banking crisis was, with an additional benefit of it making Bitcoin better long-term, because it just converts more holders.
I think you have a really good perspective on that too. I think you've made a career for yourself, not just being long for the big upswings, but also being nimble and getting in and out as appropriate. I know that my bias is a little bit more to try and just focus on the long term, because that's a framework that you can cling to when things are going badly, when you're staring at a bunch of red numbers. But it is important for everyone, listeners, us included, to just think a little bit more critically about how to lighten up ahead of potential problems, and re-add when things look scary, but actually they're constructive. So I guess to that point, our podcast is called 1000x. There is some alt buying out there. Pepe just 1000x'd. What the heck happened there? That's a wild one.
Dude, Jonah, I mean, if I knew what was happening there, I've been all on Pepe. Did you buy any?
No, I mean, I just saw it and I was like, this thing, what? It was too late. It was alive for like 3 days, and then Pepe the frog was worth $125 million.
Yeah, dude, it's insane. I mean, like, I feel like these things. I actually think so. If I were to make a bet, Jonah, I would bet, and this is not financial advice by any means, so please nobody take this as financial advice, but I would bet that Pepe becomes the Shiba of next cycle. Like, it probably just does something so absurd that you hate yourself for not owning any. Would be my guess. But I do think that, like, crypto just tends to do this from time to time, where it'll find one asset, it'll just absolutely pile in that asset, and then people probably forget about it for like 12 months. And then suddenly, like mid bull cycle, when retail interest comes back, this thing just like pulls like another like 50x, would be my guess as to what it does. Maybe it's down like 90% first, and then it goes up 100x. But it's funny. Like, there is, I think when we talk about retail, it's really about new money. Like, there's no new money in. Like, I would bet if we ran the numbers on the owners of Pepe, the vast majority of them would be people that were pretty deep into crypto already.
Yeah.
Whereas when you look at something like Shiba, a lot of people that were buying Shiba during the crazy bull run, that was like the first token that they bought. It's like they'd like been on TikTok and they'd heard about Shiba and they watched a tutorial to get on Uniswap, and then they bought some ETH, and then they sent it over, and then they bought Shiba, and like the whole reason for buying ETH was to buy Shiba, and there was like this non-trivial amount of new money in the door that got us that. And I think Pepe is just an extension of people in crypto getting bored. Like, I would bet, and maybe we can run the numbers, and I'll tweet something out about this once we take a look at it, and release the cast as to whether I confirmed my theory or not. But my bet it's just a bunch of DeFi insiders that are.
So you think people are getting into these meme coins that like the gateway is Bitcoin and ETH. They're not like just lifting Pepe with fiat. They're just washing value around that was already in the ecosystem.
That would be my guess for now. With that being said, I just think the branding is so hilarious that it probably does pull like a crazy move in the bull run.
I think so. I mean, again, not investment advice. None of this is investment advice, but you're not wrong. And it's crazy. Like what it highlights is that like actual wealth got created on that somehow. And I think what this highlights is that in crypto, you have this fantastic dichotomy between, Bitcoin, geopolitically relevant, keeping central banks honest, like not even a dark horse for next global reserve currency type arguments flying around, ETH, world computer, like fantastic technology, scaling solutions of remarkable complexity. And then on the other end of the spectrum, you have this, right? And you could say this is bad or less worthwhile or whatever, air quotes, but you could also say, hey, maybe, there is a casino element to certain pockets of crypto or an identity element or, a community element that actually has value that traditional finance just completely ignores, like penny stocks don't take into account. So I don't know. I think it's an interesting phenomenon to keep tabs on, even if you're trying to pretend to be a serious professional or are one.
Yeah, no, I mean, you need to, because I think also like that. I mean, for better or for worse, a big portion of the like product experience of crypto is the ability to gamble and the ability to bet on these things. So, I mean, if like a bunch of meme coins rip really hard, then that's actually good for ETH if they're built on ETH, right? A bunch of meme coins on Solana rip really hard. That's good. That's good for Solana. One thing that has been, I think, pretty striking over the last 6 months, especially post FTX, is that effectively every other L1 has just died in terms of activity and in terms of interest relative to ETH, and L2s built on top of ETH. It like really feels like you have to be a pretty massive contrarian at this point to bet on the AppChain thesis, like to bet on a thing like Polkadot or to bet on a thing like Cosmos. And
how would you elevator pitch the AppChain thesis? Like, what is it for people who don't know?
Yeah, the way that it's really about native interoperability and customizable blockchains, right? So like if you have an L2 on ETH, the L2 on ETH is effectively just another layer to build a bunch of applications, but a bunch of applications still have to share that block space. And there's generally a set format to the data that exists on that L2, right? So every app has to interact with the same programming layer of that L2. Whereas in AppChain, it's a little bit more customizable. So you're going to just have one chain per app, customize that chain. So for example, if you have a trading platform like a GMX that exists on an AppChain, then maybe what you want to do is you want to make sure that when you order transactions that go through on that chain, you get preference for liquidation transactions so that you have a lesser chance of getting bankrupt on that chain. And then if you're exchange without, that isn't like a GMX, you're like a Uniswap, then you're built on a chain that doesn't have that built in because there's kind of no reason for that to be built in. So it introduces a little bit more customizability, and then you have native interoperability between the two. I think like a main issue with the AppChains is one, the UI UX like really sucks right now. It's just impossible to use. Interoperability it doesn't really exist on a great level, and also it's it's more complicated, obviously, to build out your own custom chains, and the dev community just like hasn't really gravitated there. And obviously you get a lot more security with L2s and with ETH right now. But I mean, I remember, even 2 years ago, people were really bullish on the AppChain thesis, and maybe maybe my information's outdated here, but at least at a high level, it just seems like people aren't really interested in that anymore. So that's an area that maybe we have to spend some more. I always like being contrarian And
Yeah, I mean, it is definitely the contrarian moment to bet on alt L1s, app chains, basically scaling solutions or scaled L1s that aren't really in vogue right now. And I guess what happened during this most recent consolidation cycle slash bear market is that I guess the market just kind of asked, who cares? Like, does anyone? You guys have built all these really fast chains, but is there even demand for ETH right now? Um, and like, do we need all this block space? Do we need to invest time and effort building applications on top of these alternative blockchains when, ETH works just fine for the rudimentary things that we want to put on there? And, maybe that was a valid thesis, but maybe the pendulum will swing the other way in the next 6 months. Hard to bet on, though. Very hard to bet on, especially given the decimation in alts. I guess what would you look for as a leading indicator if you wanted to start buying Near, Polkadot, Solana, one of those?
I think I'd look for just like real activity starting up. Although Solana's kind of an interesting one because I think Solana's priced for. I don't want to say it's like priced as a dead asset because it still is valuable, but the fact is with Solana that at this point it's like so tightly controlled by people that really deeply believe in it that it is kind of priced for failure. What I'm saying is like there's zero fast money in this thing right now.
Yeah.
And so I think any hint of rejuvenation from Solana probably skyrockets this thing. I think it would take
one big game drops or one.
Yeah, there's no fast money in it. There's just like no fast money. There are people like Chris Berniski who sit around on Twitter and say, hey, Solana's actually pretty great asset. You have people like Multicoin. I think the only thing that you'd have to really worry about with Solana is the forced selling from FTX. If like that's actually kind of an interesting
and VC unlocks.
And yeah, although Solana's mostly unlocked, so it's so it's like maybe like redemptions for Multicoin, but you have but with FTX it's probably going to take a year or so to actually start selling as far as we understand it. I'll go double check with my lawyers and follow that up with a correction if I'm wrong, but that's the latest information that we have. It's going to take a while to actually start selling these assets. So I think for at least a short term, not particularly worried about that. So yeah, I mean it's definitely interesting. I mean Near is like I have no idea what's going on with that thing, man. It's like
hard to follow these chains.
Sort of died at like a terrible death, in my opinion.
I don't understand. Like this was like the greatest thing since sliced bread for a while, and then it just kind of faded into the backdrop fairly quickly. I go back and forth on alt L1s. On the one hand, I think, hey, like Avi says, time to be a contrarian. They've been beaten up to a degree that ETH just hasn't, and I am bullish for. I do think there will be another bull cycle. So put on a survivable amount of this stuff and just hold on, and put your eggs in a few different baskets. The other side of me just wonders, like, have the existing offerings of L1s, like have their reasons to exist been completely disproven? Have they fallen flat on their promises? Like Solana got taken out by a walking app. Like that was too much for Solana, this like performant, vertically integrated chain to handle. Near, is supposed to be this unbelievable user experience, and then no one just showed up to the party at all. I don't understand. So again, it's kind of like $30,000 Bitcoin. Didn't understand that. That doesn't feel like a stable equilibrium. These things are either going to go up a lot or down a lot, but they're certainly not just going to kind of float around in a correlated way with ETH and trade 1-to-1.
Yeah, I agree. I think the issue is that like all activity has just migrated away, and so these things are floating around with these pretty inflated valuations and are trying to, I think, work hard on the BD standpoint. I think what it takes for these things to really take off at this point is it seems like they've lost the organic war. What do I mean by that? It seems like they've lost the ability to organically attract developers in crypto to go build on their platforms and go organically attract retail. So it's like these guys are going to have to just like win big accounts. So for example, like Amazon NFT platform I don't know who they're built on, but whoever they're built on, unless it's their own custom chain, probably does very well, right? So I think it's things like that. Like, what if Snapchat decides to go launch a chain and they go partner with one of the top L1s that isn't Ethereum? Well, that probably brings a lot of users to that chain. So what I'm saying is that the winners of the L1 are probably not going to be from massive organic growth at this point. As far as I see it, it's probably going to be from a top-down heavy approach, just because the organic
Biz dev
growth is, it's just going to be biz dev, because the organic growth is just totally all on ETH and L2s.
And biz dev is harder when there is a massive regulatory headwind that kind of targets your gateways, your on-ramps and off-ramps between fiat and crypto. Definitely makes it scarier for Web 2 companies to dabble.
So how's your day?
Yeah, it's been nice. Traded some crypto.
That's good.
Here, let me ask you a question.
I actually didn't look at the markets a lot today. I mean, I always look at the markets like 2 to 3 hours a day. That was today, but I actually did manage to take some time off this weekend and a little bit this evening.
It's Avi's birthday.
I'm an old man. I'm an old man now.
Have a few more of those and you'll catch up with me. It's pretty exciting.
Well, I hope I never catch up with you, Jonah.
No, I'm joking. So yeah, basically, I think it's good to take a little break from markets sometimes. Like, crypto is just too much. Like, at least oil would give me my weekends. This is nonstop, so you kind of have to self-impose a little bit of a break. Otherwise, lose your mind.
I agree. I think crypto is also one of those things that just totally trashes your dopamine, right? Because you're
Elaborate.
You're just constantly getting dopamine from something. You're either getting dopamine from prices doing what you want them to do, or you're feeling pain from them not doing what you want them to do. And then you're also constantly getting pinged, or you're constantly on Twitter, or you're constantly talking to somebody about it. It's just like this overwhelming presence in your life that I think it can make it hard to step back out and look at the big picture unless you force yourself to go take those breaks.
Yeah, totally agree.
Even 24 hours is enough in my experience. Just like sit there with your own thoughts for 10, 15 minutes.
Take a walk and go outside.
Because you know how many people I know that just don't do that? That just don't give themselves any silence at all. Like, at any point during the day, they're listening to music, or they're looking at TradingView, or they're on Telegram, or they're on Twitter. It's like, anyway.
I agree. I mean, like,
this is not a self-help podcast, so
maybe it should be. I mean, the thing about it is, like, in traditional finance, 15, 16 years ago, like, cell phones were not a constant interruption. There was no Slack. Bloomberg messaging was pretty much the most real-time form of markets communication. Markets had hours. Like, things were kind of old-fashioned in a way, and now there is this non-stop barrage of information, dopamine or lack thereof, and I don't know. I guess in the times where it's tempting to click around and do stuff, buy some meme coin because you're bored. Ultimately, if I find myself getting too caught up in that little vortex of Discord, I feel like it's time to step back and just cling to a medium or long-term thesis and try to do less. At least that's how I end up avoiding problems.
Yeah, I think that's I think that's actually a very, very fair approach in the market. I also know you've been you every now and then you do keep Shabbat.
Yep, that's right. Heard you do the same.
Every now and then.
Birdie told me.
Man, so what else is going on in the markets today?
I think you've got a little bit of like if you're in crypto, your long-term thesis has to be that there's some kind of financial relevance to this asset that's going to exceed just gambling, right? And I think that when you see things like the 10.2% or 10.1% inflation print in the UK, you see what's going on in Argentina or Lebanon. Those are little tidbits from macro reminding you why you're bought into this, or why you might
kind of
consider buying in.
I think there are two things that have really, and the second one's a little bit more new. But the first part is, yeah, on the monetary side, there's been just a tremendous amount of strife over the last year or two in the macro worlds and in places that you mentioned, and that really brings to light why Bitcoin is so valuable. I think on the second point, there's the rise of AI and all these deep fakes, these like crazy. I don't know if you saw the song that was like produced by AI that was a Drake copy. It sounded exactly like him. There's going to be so much insane content out there that you're just not going to know if it's real or not. And that verification, that like true verification of are you a real human or not? Is this content that is produced by a real human? Is Ron DeSantis actually saying that, or was he faked? It was anyway. I'm not getting politics, but you get what I'm saying, right? It's that I actually think can be solved for in some ways by crypto, right? Just any time you want, hey, prove that you produce this video, do it the same way that you prove that you own an address with a digital signature.
That's a fantastic point. There is an immutability. I mean, obviously, I'm sure we'll find a day when AutoGPT starts launching random blockchains thousands per hour. But I mean, in terms of the chains that have relevance today, they are immutable. You can prove that something happened with a timestamp and a settlement. That's a great point, Avi.
So I think those are the like overarching themes to maybe wrap up with is those are the two most interesting things that I'm seeing right now in the crypto world. And to recap on markets, just things haven't really changed in the last 45 minutes since we recorded, but I do if you put a gun to my head, I think Bitcoin's 24K in the next month. Gun to your head, Jonah. 24 or 30?
24.
Okay, we're on the same page.
Not investment advice, of course. None of this is. Crypto's risky, but what a sobering thought from a long-term crypto bull. Just another reminder to sort of stay safe out there and be disciplined, not go crazy with risk.
To all our listeners, stay safe and have a good day, evening, night. Enjoy yourself wherever you are out there.
Thanks for listening.